I guess this will be my last episode talking about the TVIX, the TVIX. So this is a 2x levered volatility index, and their Credit Suisse is delisting this. It's an ETN, exchange traded note, and the N means that it is a an unbacked, you know, an unbacked security. Security is kind of pushing it. It's an unbacked financial product, and so they're we just popped into a really high volatility regime. So everyone's like, oh, are they doing some shady stuff to take the TVIX off the market because they'll lose money on this or something? Which I don't think that's what's happening. Um, these financial products have a negative carry. They gradually will decrease over time. And if you go down and take a look, yeah, like we know the volatility popped on that big crash, and we just got a little volatility increase here that may be pointing at, it may be pointing at a little upward volatility soon, which I'll look on the charts in a minute. But yeah, but I don't. The conspiracy theory that they're delisting this because we're about to have a huge volatility spike, I think, has it just doesn't hold any water. But it is crazy that this thing just blew up on Robinhood as one of the most popular things to hold, and now they're just delisting it like a couple days later. That is a little bit crazy. But as you can see here, they're delisting their long and short products for gold, silver, natural gas, and volatility. And so it's not like this one long volatility, financial product. They're just like, oh, delisting it like all of a sudden. These things have a negative carry. They decrease over time, and you can split, like you can do a split on the shares to pop the price back up so that it's tradable again, or you can just delist the thing and create a new financial product, which is they do both. I mean, they'll let it kind of trend down for a while. Maybe they'll do a split and push it back up, and then at some point they'll delist the thing. They'll delist it, and then they'll just create a new financial product that is basically the same thing with a different ticker. And this happens, over whatever, like 5 or 10 years. Usually it takes a while to come down. But this is the structure of these kind of securities, is that they have compounding. And so every day when they do the compounding math, you lose tiny percentages. And just long term, those tiny percentages just eat the stock down. So, I mean, basically, mathematically, the shape of the thing, it just decays. They decay to zero. And so in the short term, and they're designed for day trading. These are day trading instruments. All of these things. You're not supposed to hold any of this stuff long term. And if you go look them up, it says they're day trading instruments. And so at the start of a day, it should track volatility. The TVIX is a 2x, so it should track volatility with 2x levered motion, and it does a really, really good job doing that. And then at the end of the day, they run the compounding math, and it loses a tiny percentage. The next day it opens, and it tracks volatility really well. Um, and and I don't think anyone cares to look at the charts of this one right now because they're delisting it. Um, but long term, if you try to hold something like the TVIX long term, and this is not financial advice, just a general idea of the thing, the structure of it, but if you hold it long term, you just keep taking tiny percentage losses every day, and it does not track long term. It falls away from the actual volatility chart the longer you hold it, and it just decays. And so that's why they have to delist these. That's why they have to make new financial products. And so that's why I never go long on any of these ever. Um, the only thing I do is if it's coming to a position where I think that there's a high chance that they could drop, I'll short them. Like I love to do like a put option or something on these. And so right now I'm long volatility, and I sure am not holding TVIX. And I have several videos where I've explained this, but I would never buy TVIX and hold it for a period of time and try to go long volatility with holding a TVIX, because TVIX you just lose percentages every single day, and it makes no sense to hold it. But if you do want to hold a long vol position for a long period of time, what I have right now is put options out to, I think, September right now. I have some longer term put options on the SVXY, which is similar to uh, what's their short one? VIIX. Um, their short vol thing is called VIIX. So SVXY is a short vol product similar to that one. And so if you do a short position against a short fund like this, then those compounding numbers help you. And you still have to pay for a time, you have to pay a time premium if you're doing like a put option or something like that. But the compounding helps you. So you kind of gain tiny percentages every day if you're doing that. And so, like, no, I don't think this is some big conspiracy that it got popular on Robinhood, so they just delisted it. I mean, this is a pretty standard delisting thing that banks do. I mean, these products decay over time. They delist them, they create new products. And that, yeah, they do that over whatever, 5 year, 10 year, 15 years, something like that. It depends how far they fall. And this is similar to like the oil funds, like the UCO and the USO. Those decay over time as well. And a lot of people have been holding, UCO to try to go long on the oil price. And just the structure of that thing, like you're losing percentages every day. And it's been going up at the same time as oil price, but it has been performing way worse than the oil price. And then if it drops, like you'll just get destroyed. So yeah, this isn't a conspiracy. As far as like, oh, it just got popular, so they're screwing everyone like today. But it is a structure of a financial product that a lot of people don't understand, and they buy these and they hold them, and they just kind of eat the losses. And I guess, I guess that kind of negative carry structure is why the banks like them. Like the banks make money, and everyone that's holding them kind of loses money. But they're not designed for holding, like even for 2 days. Like these are designed for day trading, all of these things. Um, and let me jump over to the charts, and we'll take a look take a look at the TVIX. Let me go look at the volatility charts right now. Here's the TVIX, and let me just show you like this is a 2x, so it gets, bigger moves up and down, and it's supposed to track volatility day to day, and it can obviously go up, because we had a huge volatility spike during that crash, and that was one huge wave, and so in a short period of time. So TVIX tracked that wave really well because it was a solid wave in a short period of time, and it went nuts. I mean, up to 1,000, it's kind of settling off around 150 or something like that. But yeah, look at the shape of this. Like this is super low vol here. Let me just go out longer term. Let's take a look at the shape of this thing. I didn't know it was this ridiculous. They've they've all they've definitely done some reverse splits of this thing already, of several. Look at the number where they first listed this product. And this is not the dollar amount they listed the product at. This is just going backwards. All the reverse splits will just increase the past prices so that you get the current price. But what is this? $500 million a share. So they've definitely split this thing plenty of times, and that's from 2013. And well, we have been decreasing volatility also during that whole time period, but we haven't decreased volatility from 500 million to 150. This is the negative carry on the product that I'm trying to point out, and it had a huge rip to start. So let's just take that off the chart, put auto on, and let's follow the shape of this thing. So if you ignore that huge rip to start, it's, what is this, 13 million dollars a share. So you can see as we go down, And I don't have like an overlay of volatility to throw on this, but I can assure you that like day to day here, and well, this is weekly, but even weekly it's pretty close. But like this will track the volatility really close day to day. But as you zoom in, you can just see it just decays. It decays over time, and it's the the numbers on this one are insane. Like I've done this on the oil products, on the oil ETNs, and it's pretty dramatic. Like the ultra crude oil, like the UCO, is a little ridiculous, but I mean this thing, this is crazy. And okay, so it's down here at like 150, and that's relative to five 500 million, where it was just at in 2013. It's just a slight decline from 500 million down to 150 now. And so at some point, what they'll do with these as they collapse down to zero, this is really, really insane. I didn't expect it to be this steep. But I mean, from 2 years ago, it has. This is in a time period where volatility was really well. Let's see. Yeah, we had This is Volmageddon here. Okay, so we had a big volatility kick during Volmageddon here, and the crash off of Volmageddon up to the volatility here didn't come anywhere near the highs, and then we had this huge crash. So this is kind of the shapes that you get. I mean, you get relatively, these are where the spikes in volatility are, but every time you do a new spike, it's lower and lower and lower and lower. Like this volatility spike is epic. Like it's one of the biggest volatility spikes in history, and it doesn't even get up to where it was back here. Like it just barely meets that 2018 high, um, which was not even that big of a volatility spike. So, and if you zoom in just on the trading recently, let's get on like whatever, like an hourly chart. You can see the same kind of thing. Yeah, so this is just our action like the last couple weeks here. But this is our big spike that we got in the crash. So it went way up, right? And this is a big volatility spike. And it went to what, like 1/5 of the height of this spike? Like this is a pretty big spike. And just the action that we're getting today is a pretty big spike too. And look, it's nowhere even near the levels that we were at last week. Like that doesn't even make sense. So this is the compounding just kind of eating away. You get compounding, and you get future contract contango, and it just eats this thing down, and it just decays. So this is what I was talking about. Let me look at the SPXY. So hopefully they don't delist this thing. But what I have now, and this is the big crash on the SPXY, and it's down because this is an inverse. This is a short VIX fund, and it's not levered. There's not a big levered short VIX fund, so that's fine though, because if you want to go long vol, not investment advice, this is what I do, and this is what I'm doing right now. And you can see that this crashed way down here, right? But on the TVIX, the rebound went almost down to where it started, and look where it went here, like almost flat sideways, because the compounding and the contango and all of that and the structure of the ETN is helping you on this one. And so if you have a long-term, put on this as a long vol position, like it's hard for this to go against you, although you're paying for time on a put. But then when it crashes, like a little move like this was that little tiny bump on the VIX, made it almost to the peak of the huge crash just here. And if we get another little move, like it could easily get here or all the way to the peak, like right now, like just a medium-sized little move. So let me go over to the S&P, and let's take a look at how VIX, like volatility and S&P are. Oh wow, we're getting a big down. Oh man. Okay, so but it's not a huge. That should be a bigger spike in vol. Well, we're already pretty high vol, and we're just kind of retracing what we did yesterday. It's not like breaking into new territory yet. So this is what I'm thinking on the S&P right now is, well, Oh, sorry, in terms of volatility, um, we're in a precarious position where I think a long vol position makes sense, and that's what I like to do for a long vol. Is you get a super long time period. I mean, I think I only have 3 months because I'm expecting this to happen like this week. But I mean, you can go a lot longer than that, and then the compounding is helping you pay for the time premium on the volatility position, and you don't have to do any kind of complicated collars or any kind of stuff like that. Um, you can just do a long time dated put, and the compounding contango structure of getting a put against a short VIX fund, and SVXY is the biggest one, and that's I hope they don't start delisting that thing, but yeah, anyways, that's my long vol position that I have now, and so and this down move now is not changing the volatility very much. It's just kind of swinging back and forth, and we're not getting big volume on this candle. But what you get on the VIX is when you're breaking into new territory here, or oh, I mean, obviously the big rip over here was insane on the volatility. Wait, oh, there we go. Okay, so yeah, I mean, this was super low volatility environment, and this wave down shot shot the volatility to historically high levels, and the volatility even all the way back up here never got down to reasonable levels. Like this is still insane bear market volatility levels, and so that's why I still have a bear market model here. We have bear market volatility, we have a bear market reversal off of a major bull market line. We've reversed off the bottom of a major bull market line that was supporting this thing for the last 2 years. We're underneath the thing, and I just think that I think a long vol position makes a whole lot of sense here, and so I I'm long nothing. I'm long nothing right now, actually. I was trying to find a spot to go long tankers over here. I thought that the oil tanker situation might have bottomed out, and I think that we might be getting close to another bottom on those. But I got stopped out of those, and I'm mostly cash. I have a long vol position, and then I just have like some shorts on Russell because these are not doing stock buybacks, and they're not, these have the most solvency risk as far as companies that are going to go bankrupt and not get bailed out. American companies, XLF, financials are looking really bad with the super low interest rates. And so those are the only short positions I have. I don't have a whole lot going on right now, just because this market is so crazy, and we're halfway in between two major support lines. Like this is a 12-year bull market line that supports the whole bull market off the 2018. We're above it right now, and we're below the steeper bull market line that comes off 2018 bottom. 2008 here, 2018. We're kind of halfway, just kind of swinging around. Super high volatility. There's not a big indication of what direction we're going to shoot from here. Um, but I have bias to the downside for sure now. I mean, I sold short positions here, and then I got more short on this kind of reversal here, and I'm not actually very comfortable with it right now because it's pretty easy to shoot real fast. Like you can make this move in a day or two to either one of these, and usually the down moves are going to be a little bit faster, and the long moves would take a few more days because that's just what you get. Like it kind of grinds up at this angle and down at a steeper angle, um, but yeah, in general, when you go down, the volatility will go up, but you need to be breaking something important usually for volatility to go up crazy because people start freaking out when you start breaking levels. And so the volatility should pop a little bit getting through here. And if we get through kind of this level here, it should pop. And if we start breaking this or this, the volatility should go absolutely nuts. And so yeah, like the volatility will pop as you break levels that people are kind of holding as stops. Like as you if you break people's stops, like the volatility will go crazy. And then the other thing that makes the volatility go nuts is if you get a wave down, like a good wave down, and then you get into a consolidation zone like that, like that's what makes the volatility go absolutely crazy. And that's what we got back here a couple of times. Actually, the two big volatility spikes that we got, the volatility was going up on the move down, but we got this consolidation reversal here, and this shot the volatility up big time. And then this consolidation reversal here shot the volatility up absolutely insane. And so that is extremely, extremely useful information for a bear market position, which is you don't really have to get into a long vol position early if you're kind of swing trading it. You can kind of get the bear trend going. You can wait for confirmation. You can wait for a back test or something. Like if you wanted to try to get a short position off of maybe the bottom of like this trend line, if this happens, like you don't have to guess if it's going to happen. You wait. You can get a back test on this thing. You can get a confirmation on a down move, and you can go long vol here. And then if it, you get like a little bit of move on your long vol position, great. I mean, it's not a big deal, but what you're looking for is a consolidation reversal point, and that consolidation will blow the volatility position absolutely up. And that's exactly where you want to get out of all your shorts is when you get a consolidation reversal it's going to be high volume, super high volatility consolidation, and you can close, you can get out of the long vol position when you see that at a big gain, and that's a good indication that the market is going to swing. And then you can see when it does swing, does volatility come way down? If volatility comes way down on the swing, then that is a good indicator of an uptrend. And this, just looking right back here again, same kind of thing. So here we got a big consolidation reversal, but this up move barely decreased volatility. And then we got a big follow through to the downside. But this swing decreased volatility a whole lot. Like volatility started falling off a cliff even before we did this reversal. So that's a really good indicator, kind of playing around with volatility in a bear market setup. And yeah, so that's how to avoid the negative carry on a vol position. Is you find a short vol fund, and you can do a short position on it. And so I like to do super long dated puts or something if I'm going to take a long vol position. And yeah, and that's just how volatility usually maps to the stock market, which is not always true. I mean, you can even get an up move that increases volatility sometimes. Just if stuff seems crazy, volatility can go up. And we've had some really weird volatility action recently. Let me just go to the VIX. So, this is the volatility spike that we got during that first consolidation reversal. And it did come down a bit, but not way down. And then this is the volatility on the second consolidation reversal. But the actual time period where the reversal happened was after this. And same here, like the consolidation itself spikes the VIX, and the VIX starts decreasing before. It's a leading indicator. And it's a really cool leading indicator. And so for a bear move, you get to kind of get out of your long vol position and possibly your shorts at a really good time using that as a leading indicator, which is a cool move. What was I trying to point out? Oh, look at this thing's popping. Oh wow, it's really shooting up. Yeah, so here's the conspiracy theory on the on the delisting the TVIX. It got too popular and it's gonna shoot up. Like they're expecting a long vol position. The bank doesn't want to be providing this thing, I guess, if volatility is going to go way up again. I don't think so. No, they're just delisting. They're just delisting these funds, and you could see the shape of the thing collapse over just whatever it was, like 5 or 6 years. When was it? 2013? Yeah, like 7 years. It collapsed from an absurdly high valuation and decayed way down. And yeah, and volatility was decreasing over most of that time period. But just the volatility on this down move, like that should, if it wasn't decaying, like this volatility move should get up near all-time highs, not like, it's at 1,000 and the previous price of the fund was at 500 million or something. You can see the decay on this thing's absurd. Well, on the TVIX, I mean, and that's because it is 2x levered and it has the compounding and the contango, so that it's all decay multiples and stuff like that. So the bigger the leverage, the more it's going to decay. Um, but yeah, so let's go flip through. Let's go flip through the. I don't know. I was looking at the DXY and the Japanese yen overnight today, and yeah, the DXY started to maybe break out, and it usually will go up when the stock market's come down. And the thing that made me expect the stock market to come down today before I saw anything was yesterday the yen. The yen made a big move down, and this big move down on the yen preceded the last crash. The stock market followed the yen down last time on this one. And so the yen has actually been sort of a leading indicator to stock market moves, and a down yen move is a down stock market move. Um, but the yen's recovering and the stock market's going down now, so but it's still a downward move in general on the yen, but not a big one here, but but that was a leading indicator yesterday, and it was really the only leading indicator. We weren't really getting any kind of momentum or anything like that. Um, what's Bitcoin doing? Bitcoin's been in kind of an upward wedge kind of area, and it's breaking down. Yeah, it keeps breaking down when the stock market breaks down. Bitcoin is acting weird. It's not really behaving on its own. It keeps breaking down with the stock market, which is strange. Um, but now, well, let's see if it closes below this wedge. I don't think Bitcoin's really useful kind of to look at the stock market, but if it does kind of break below and backtest this wedge, it'll be kind of a different zone for Bitcoin. It's bounced off the bottom a couple times here, and now it's breaking through. This is not a good look for Bitcoin. And then, yeah, IWM and XLF, this is financials and the Russell. The IWM's the Russell. And so they've been in kind of a bearish configuration, and they don't have any of the fundamental things that are supporting, well, for instance, the Qs. So the Qs, this is, the Infotech big. These are the big market leading stocks. Oh, we're getting a huge revert. Okay. Oh, we might get a real move here. We might get some follow through on this. So these are the big guys like Apple and Microsoft and stuff like that. And so for the stock market in general to turn over, the Qs are really gonna need to make a downward wave move, not like a 1 day pullback. Like a real down wave in the market should have a down wave in the Qs. And I talked a lot about liquidity over the last week or the 2 weeks because the Fed has completely stopped doing QE as of 2 weeks ago, and they're not buying any bonds, zero, as of 2 weeks ago. And they announced just 1 week ago they're going to start buying individual bonds. People started freaking out. They're not doing it. Like, that's something they can do, and they said they will do, and they aren't. Just like last time, they announced they're going to start buying bonds through the ETFs, and they didn't buy any. And the stock market, the bonds, like the LQD and the junk, like all the bond markets started rallying. And then later they did come in and buy a couple. Let's check out this. So this is the LQD. These are the investment grade bonds. So, I mean, down here around the lows, this is when the Fed came in and they're like, we're going to start buying investment grade bond ETFs, like the LQD is the main one. And so when they announced that, it rallied like crazy and they weren't buying anything. They just announced they were going to buy them. And so it rallied like insane. And then they did come in and actually buy some and it rallied some more and it's stayed up. Um, so the majority of this up move had nothing to do with the Fed. They weren't buying anything. And then they just bought a little bit here, not very much. Most of their purchases are treasuries, mortgage-backed securities. And as of 2 weeks ago, they are not buying anything. The balance sheet went dead flat 2 weeks ago. And it's dead flat again this week, but it's actually headed down because they're taking money out of the repo market. So that's what I've been saying as far as liquidity goes, is the Fed stopped adding any liquidity. And the only stock still doing buybacks is the infotech sector, like the Qs they're still doing buybacks. And so I think that is what's driving the super high chart on the Qs is still driven by stock buybacks. But there's no stock buybacks as of 2 weeks ago. And what have we seen on the Qs since stock buybacks stopped? Right here. This is where where the Fed balance sheet expansion stopped right here. What have we seen? A mess. So yeah, let's see. I won't get another balance sheet update for, I guess, 2 more days. We'll get a GDP number. And then, yeah, the stock rotation thing everyone was talking about like 2 weeks ago. I think we're getting the opposite of that now. So people have been all over the Qs. It's the popular thing. It's the big trend. And then we started getting this rotation into small caps, into financials here, right? But then these small caps and financials started falling off, but the Qs kept being strong. And so we're seeing like a rotation a bit out of these ones and back into the Qs. So people are like, maybe that's a sign of market weakness. Yeah, I don't know. But I think the Qs need to really make a move for this stuff to actually move down in any meaningful way, more than just one day down or something. But the thing that is happening now is we're coming to the end of the quarter. And that matters a whole lot because the big funds, 401ks, pension funds, hedge funds, they have their little balance of stuff, whatever, 60-40 stocks and bonds. And so the the bonds have been relatively flat and the stocks have rallied like crazy this quarter. So now all the funds they're too heavy on stocks. If they were 60-40, now maybe they're like 70-30 stocks, right? So they're going to have to sell stocks and buy more bonds to get back to their 60-40 when they rebalance. And this is the biggest quarter rally in stock market history, right? So this should be the biggest rebalancing move in history, coming at the same time that we have decreasing liquidity. And we'll see, yeah, we should be able to see probably Friday if liquidity is still decreasing. And so when I look at liquidity, I look at pretty much three things: is the Fed balance sheet to see if they're expanding. And that liquidity goes into the financial system, which can go into stock buybacks, which would mostly go into the Qs because they're the only ones doing stock buybacks right now at any meaningful rate. And then you go look at the Treasury General account to see if Congress is holding their money or if they're spending it into the economy. So, I mean, Congress did do like the little stimulus blast, which went into the economy, but it was trivial in size to the Fed balance sheet expansion. But right now, the Fed balance sheet is stopped. The Treasury balance sheet is still going up. Their Treasury is taking liquidity out of the market. The Fed is actually taking liquidity out from their end. And now I'm hearing reports that the European markets are shifting away from American securities back to their own securities over there. And yeah, if Europeans start selling US assets, it could be because they want to move back to their market, or it could be because they need to sell US assets in order to get dollars to pay their dollar debt loans. And that's what happened here. This was not a market rotation. This was a liquidation move where other countries around the world had to sell U.S. assets in order to get dollars um, because the banks kind of froze up and they couldn't get liquidity. The banks didn't have liquidity. People couldn't get loans. They had to pay, so they had to sell assets. So this is a liquidation rip. Um, but it doesn't look like we have a huge liquidation kind of setup this time. Like the move index isn't crazy. The bonds aren't doing anything weird. But it does look like there's kind of a flow of money. So it looks like people are just kind of moving away from American assets back into their own assets a little bit right now. So there's a lot of kind of liquidity stuff to take a look at this week. And so like a real down move wouldn't surprise me. But just on the technicals, uh, we haven't, oh man, we have almost, while I'm making this video, I've almost done a real down move. So yeah, so I think when we popped through this area, the VIX kind of went a little wild. And then we've been in well, that's not a good angle. This kind of wedge here. And so, my video is coming in today. We're talking about we kind of bumped our head here and we didn't make a bull move. We didn't get out of here. We didn't get any kind of bull setup. So it's like, okay, we'll probably kind of swing back into the zone here. I wasn't looking for a huge rip today. I was just kind of looking to bounce off the top and just kind of see where we are in this range. But then we put in a big red candle pre-market, and yeah, and the yen went down, so it looked like a bearish day, but not. I mean, this is pretty mean, and yeah, we'll have to see. So like for me, like on a short position or like a long vol position, like right now, we're not getting a ton of volume on this down move, and so that does not make me want to get out. Like here, like see where we got this huge volume. Like this move didn't get a ton of volume, right? But this one got more volume. And so the big volume spot, like you sell into the volume. If you're looking for a spot to sell out of, if you're swing trading on like a long vol or a short position, this is not indicating that we've hit like a reversal area. So that's kind of the stuff to look at for a reversal area. So on a vol position, you want, a down move, but you want a down move on big volume. And then really for a volatility position, you want like a consolidation zone. So those are the kind of things to look for on a swing trade for kind of a long vol, short combination play, which is what I'm doing here. And what's gold doing? People have been saying gold is going to break out and blah, 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 blah. And it is a good technical setup. It's a really good technical setup for gold. We have the moving averages coming under here. We've broken out of the top of this area, and now we've kind of done a minor kind of wobble back check into it. So this is a really good technical setup for gold to move up. But right now we have really nothing driving inflation. What's silver doing? Like the fundamentals for gold are not getting better right now, they're getting worse. And silver's wobbling like crazy. Like silver is better for inflation. Gold could do okay without a big inflation boost, but it's better for gold if there is inflation. So I don't really trust gold. I mean, outside of just kind of a technical setup for it, I don't like it right now. Fundamentally, I don't like anything right now at all, except potentially maybe oil tankers are bottoming or something like that, or I just don't. It's such a weird spot to try to get new positions because we're just in the middle of nowhere with high volatility just swinging around, and it could do anything. It's just crazy. So yeah, so I mean, we got a big move down here and then an immediate wave back. So that's what we want to see. I mean, do we bounce out of this area and wave all the way back to this area like right now? Because that's the zone we're in, and that's kind of a generic move. And then if we break out of this area, we're immediately in major resistance. Like this long-term moving average has been the crazy action zone and the big bounce and the big bounce and the big moves. It's been the huge area for the high volatility moves that have been happening here, is this moving average. And so this is kind of bull market area above it and sort of bear market area below it for, from kind of from the technical perspective. On the bubble model, rejecting off this is a bearish move, and then getting below this and rejecting off this is long-term bear market scenario. So sort of on my map, we are still setting up for a bear market, but we haven't gotten into one long term yet. And that's what I'm looking for now, is if we do that, or if we got out of here to the upside, if we swung back and set up and got out of here, like this is a huge area to get rejected into a bear market zone. And if we get past that, then it's a huge area to go freaking hyperbolic bubble mania zone. And just from the technicals, it's huge area. But on the fundamentals, really what I'm watching, it's not the same fundamentals that most people watch. Like what I'm looking at, none of my stuff is normal, so you'll get a different perspective here. But I'm looking at these long-term support bull market lines as the actual areas that are setting up bull or bear market activity, and we're just kind of in between. And then I'm just really trying to track liquidity, because that's been the thing that correlates the best with the movement we have gotten so far. And so liquidity is decreasing now. We got a bear market rejection. This is a bear market model. I'm short. I'm expecting bear market moves right now. But from the technicals, we're just in a zone in the middle of another zone with high volatility. And so technically, it's pretty easy to get a big move either way from here. And so it's kind of a crazy area. But anyway, that's kind of how I'm positioned and what I'm looking for. So like if this volume went nutso today, like if it kind of tested this and volume went crazy, I would probably close all of my positions, and just see what happens around this line after a high volume, because that's what you'd kind of get on a bounce, is a high volume down candle. But we're getting a huge down move on low volume now, which is that's much more indicative of more follow through, I think. I mean, although, well, this one this one didn't get a bunch of volume and we bounced right back into the zone. But yeah, as far as kind of a big reversal area, like we got a big reversal area here that was wild. We got massive volume here, and so yeah, we did get a big volume move here, and this is where I actually closed a lot of stuff out on that move, was just on this popping candle. And then we got this crazy stuff afterwards. And so, I mean, since we got this and we got a higher VIX area, this market's just nuts. It's just absolutely nuts right now. So, not investment advice. And this is the TVIX. There's not really a playlist to put this one on. Go check out my playlist, financial education stuff, and happy trading.